Welcome back, ladies and gentlemen, boys and girls, to another Forex market preview. My name's Jason Stapleton, and if this is the first time you're joining me, thank you so very much. I really appreciate it. And if you are, one of the tens of thousands of people that either gets sent this email or who watches it on YouTube every single week, I want to say thank you to you for continuing to come back again and again and again. And what we do here is I try and find you some key trading opportunities to trade next week. So this is a little bit different than some of the shows that you may have seen in the past where they do a weekly review or they kind of point out some support and resistance levels. What we're trying to do here is give you some actionable trading setups that you can trade next week. And so that's what I'm going to be showing you this week as we run through the Forex market preview. Now, real quick recap. We didn't talk about this last week, and I can't believe it was because I was doing the new setup and I was so excited about that. I didn't discuss August. And really, July and August is really the time frame. For those of you who, I get a question every year about when should I take off? Should I really trade the summertime? Should I trade over the holidays? And I kind of, because we have new traders every single time I do this, or every single year, I tend to go over that again and again. This month, I forgot to cover the summer trading session. Now, one of the things that you're going to notice if you've been following if you followed the Forex market preview last week, is that several of the trade setups that we had never panned out, and the one or two that we were watching on a structure basis, we'll take a look at Aussie dollar today, didn't end up panning out. It ended up just going straight north. The market isn't respecting or wasn't respecting structure, and the patterns aren't completing. They're not coming all the way through in order to give you a nice pattern setup. And I find that that is typical, and this is strictly my opinion, but I find that that is typical of both the summer months of into July into August, and also November through December, mid-November through December. The reason for that is all of the major traders in the markets are on vacation. In August, they take a vacation, and they take a vacation over the Christmas and New Year's holiday. And of course, we have Thanksgiving at the end of November, so you will have a slight slowdown as we move into Thanksgiving. And then, of course, Christmas and New Year's are a time when everybody's spending time with their family. So because of that, because there's no major money moving around, you get kind of a stall. And we see this in the U.S. equities market right now, where we're seeing a slight pullback in equities, but it's on very low volume. And those type of things occur because there's no big money in the market kind of driving sentiment or driving market decisions. So as we look at this, there are two ways that you can handle this. I'll lay it out for you. First of all, you can just continue to trade. Last year in August, although we had, it was a typical August, our pattern formations really crushed it. We did very, very well in August last year. And I remember looking back at it and thinking, man, this was a pretty good August for having everybody out on vacation. But other years, you're going to have, years where August, July, and August aren't that great of trading months for you. So you can either just continue to trade through, like we tend to do here, just to be able to provide you some opportunities, or number two is you can just take the summer off too. Just take August off. Take the kids out, go on a vacation, shut down your computer screen, take a break from trading for a month, and come back in September, trade through until the end of November, and then take a look at taking off in December and coming back, second week of January, when all of the other major traders are coming back. So neither one is right or wrong. I'm not here to tell you, well, this is the way you should do it or shouldn't do it. You can make money doing both ways. Just understand that as we move into August, that this is the time typically that most professional traders are not in the market. So you're going to see lower volumes. You're going to see the market not respecting structure because it's easier to push the market around. So the players who are there have the ability to do that. And more importantly, the people who actually know how to do the stuff that I'm showing you here in the Forex market preview, they're not around either. So with that said, let's go ahead and start running through. We'll just start. Let's not start with New Zealand yen. Let's go ahead and go back to the euro. Euro has run right up into structure, right there around 3400s. We don't really have a trade here unless, zoom in here, unless we can get a double top here. If we can get a double top, back up into this zone at 134, a nice even handle. Remember, we like to watch the even handles because the even handles, 134, 133, 132, they give us good areas of potential reversals. Markets tend to be attracted to those numbers and then also repelled from those numbers as well. So if we get that double top against maybe some bearish RSI divergence, you're going to have a fairly low risk shorting opportunity there because you've got this great level of structure back from from earlier this year that you can play off of. So we'll go ahead and watch that into this week and see if we can get that double top bearish divergence on the. And what I mean by bearish divergence, for those of you guys who are new, I don't want my properties, I want actually my studies. I'm going to grab an RSI here, a relative strength index. And if you need to know what that is, if you're the kind of guy who wants to know exactly what it is, well, then just look it up. And I'm going to set my RSI to a 7 period. That's what I always leave my RSI on. I'm going to make it green here because it's easier for me to see. And I'm going to make my overbought 80. So my upper band is considered my overbought zone at 80 and my oversold at 20. And I'm going to make my overbought red for sell and overbought green or oversold green for a buy. I better make that a little bit darker or you're not going to be able to see it. And I'll make them a little fatter too so that you can see that. Boom. Boom. And we'll make this a little fatter too. Sorry guys, I guess I could have done this in advance, but and we will set as a default. Close it up. And now here we have the RSI. The RSI, so when we're looking at this particular trade, market went up and up and up. We were right into that 134's handle. Looking left, consolidate the chart up. Looking left, I got structure. Look left, structure leaves clues. And what I see is the market's running into that 134 against structure, was in an overbought condition, and then we pulled back. Now, if we rally back up, again, these are two ifs. We're applying conditional statements that tell us if these set of parameters occur, then we're going to take action. So if the market pulls back up into 134s, then we're going to look down at our RSI and we're going to hope, or we're going to expect to see the market to put in a lower high on our RSI, giving us some bearish divergence. What I mean by that is, as the market presses up on the initial high, we set an initial high on the RSI. Then the market retests that high. So we come back in to challenge those 134s, but we do it on less strength. That gives us that bearish divergence. So when we get that bearish divergence at a 134 even handle at structure, double top, we have a set of conditions that provide us a statistical probability that the market is going to go one direction rather than the other. We have created, through a series of if-then thought processes, a condition that now gives us an edge in the market. So we can say if the market runs up into 134s, we have an overbought condition, the market pulls back, puts in a double top with bearish divergence, then we're going to sell. And there are more specific rules for that one of the things that we talk about, we may talk about it in the Technical Trader Workshop. I'm not sure if we'll have time, but definitely it's something that we cover in the 12-week transformation, is how you actually qualify. What is the double top? Because one of the conditions that we have to have at Trade Empowered whenever we teach anything is we say 100 out of 100 traders have to agree on what we're seeing. That means that everybody looking at the chart who's been trained by us has to be able to say, yes, that's a double top, or no, it's not. And the only way we do that is by applying very specific rules to what constitutes a double top, what constitutes bearish divergence, etc., etc., etc. So for those of you asking those type of questions, that's not something that I talk about in the Forex market preview, but definitely something that gets covered in the courses as we move deeper into the process. Again, this is just supposed to be actionable trading ideas for you guys, not really a training, although I can't for some reason stay away from the training side of it. So anyway, that's the Euro USD running into those 134s. Let me see what else we've got. Let me get rid of the RSI. Nothing on there. The yen. The yen is giving us a nice trade setup here. We've got this is a bat pattern. Okay, now bat patterns are nice because they complete very low against the structure pointed around the 886, which gives us a very nice risk to reward profile. And for those of you who are experienced traders, just go ahead and look at that, see if you can identify where the bat pattern is. This is a great training exercise, trains that reticular activating system. That's that little piece in the back of your brain that tells you what to pay attention to. The more times you do this, the better you'll become at it, and pretty soon you won't even have to draw in your Fibonacci lines. The patterns will just start to appear to your eye visually. That's how you can tell that you're really becoming a good technician. But now that you've had a chance, I'll just go ahead and draw in the actual bat pattern here. Now this is an ugly one. It's not as pretty as some, but it is absolutely a bat pattern. So we're looking for the market, for those of you who are new, we're looking for the market to press down into this 886 at around 94.68. And at 94.68, what we would expect is the market to rally. And we'll put our stops below the lows on this side, and we'll look for some profit targets as the market rallies. So that is a bat pattern on the yen on the 4-hour chart. Now here's the Aussie. Now, if you'll remember from last week, we talked about this support level here. Boom, and that market violated that support level. And I said, watch for the retracement back up into 90.24s. And I said, I think we were talking about it in the private client group. I even did this, and I took my Fibonacci extension, went swing low to swing high, and I said, I'm still liking this setup, because we can run into the 127 extension just above that structure line and potentially have a pretty good trading opportunity here. None of that materialized. The market went straight north, didn't even take a breath, and just completely ripped us up if you guys were involved in this trade. So again, the trend continuation trade, very, very profitable trade when traded correctly. And in this case, selling on a limit order there, hey, we just took a rip. You just had a loss. And that's going to happen more times than you want to count as a trader. So we'll chalk that one up and just move on. Canada, we talked about this one last week. This is a potential cipher pattern. Market has come down into the 127 extension. We're looking for a sell around the 786. Market didn't get there. Again, this is part of that. The market just goes really consolidated. It really consolidated, and we rally up, didn't even hit the 618, and then we pulled back down again, and now we'll just kind of have to wait. We need to see one of two things happen. We need to either see the market come up and fill us at the 786 or violate the lows at around 102.50s. We get under 102.50s, it'll negate the pattern, and we can move on. Until then, we just got to sit and wait. Euro yen. Great trading opportunity here. This is a Gartley pattern. 127 extension coming in around there, I think. Should be a 786, 127 coming in down here because we dipped a little bit low. Yeah, so there's your 127 extension. I had it almost right. The 127 extension coming in there, we've double bottomed. Bullish divergence, there's a great example of that divergence that I'm talking about. So market makes an initial low here. We press down to retest the previous lows, but the RSI cannot get back down there, and we get some very nice bullish divergence. So opportunities here to buy, looking for the market to rally. We've got a pattern formation with a double bottom, bullish divergence. So very, very decent trade setup here. And because this completed so low, it actually completed along the 886 rather than the 786, which gives this basically a risk-reward profile that we would see normally in a bat pattern. So it's a very nice trading opportunity. I take that every single day and twice on Sunday. So pound yen. Take a look at that. We got nothing there, at least nothing that I want to be concerned about. I'm not going to worry about Canada yen. Let's move to New Zealand yen because we talked about this one at the very beginning of the event today. We have a potential cipher pattern here. Now, market has already double bottomed. Bullish divergence. Okay? Again, there's our bullish divergence. There's the double bottom. Market has come back up in to retest the previous highs, and it couldn't do anything about it. Tried to get over. Couldn't get over those previous highs right here. We need to see this market get over these highs. If we can, then we're going to have a potential cipher pattern set up here. Drawing it in for you. coming into the 786, which should be somewhere around there. Probably a little high there. Somewhere around there. Let's draw it in and see. Right there on that 786 retracement. And we'd be looking to sell around 79.56. That's going to be our sell, 79.56, if the market can get up there. So that's New Zealand yen on the 4-hour chart. That's something I'm going to be watching into next week. And I believe that that's the last thing that I want to cover with you. Again, here's a great example. Euro New Zealand, we were looking for that press down into that support, that 786, 127. We had the buy zone. Those of you guys who follow every week, we talked about this. And market just never dipped down in there. And I think that's as much a summer, a summer phenomenon as anything, although it does happen. I mean, it happens frequently. Maybe this was just one of those times. But I'm noticing in the market that, hey, we're taking a few more hits here in late July, early August than I'd like to tolerate. And I know that it's just the time of year. So we just trade through it and we look for better days in September and October. So that's going to do it this week for the FMP. Again, sign up. If you look to your left, you're going to see a sign up box that says join the email list. And if you'd like to get this sent to you every single week, along with a bunch of other training and free stuff and information about the Technical Trader Workshop that we're going to be doing in September, just go ahead and stick your email address in there. This is my only request of you. If you're going to put your email address in there, don't put that third or fourth email that you never check and you just put it in there to get whatever the free stuff is. We all got email addresses like that. I can appreciate the desire to do that. Just please don't do it to me because it hurts my deliverability and it hurts my ability to communicate with you guys when I got a bunch of email addresses in there that nobody opens. And not to mention the fact that if you do that and you don't open it, then I just purge you from the email anyway because I don't want you dragging down everybody else and my ability to communicate with you guys. So please, if you're going to put your email in there, just put in one that you check. And I promise, I'll make this promise to you. If you'll do that, I won't spam your email box every single day with a bunch of junk because we don't do that. So please, please sign up and that way you'll have all the information that you need and you'll be privy to. I got a lot of questions about, hey, send me the information on how to sign up for the Technical Trader Workshop. Well, get on the email list and I'll make sure that you get the information when we deliver when it comes out in early September. Any other questions, comments, please go to YouTube. I try and check that rather frequently, and if you ask me a question, I do my very best to respond to you. And leave me a question or a comment. And don't forget to click the like button because YouTube likes that, and I like it. So anyway, until next time, guys, good luck, good trading. I'll talk to you soon.